Welcome back to the channel, guys. I'm your host, Buckning, and today we're gonna go through the portfolio as we always do. But I'm just gonna talk a bit about value. There's some deals that are looking real good in the market with everything happening, as we already know, old news and just current news in that sense. But here's an opportunity to seek out the value in a lot of companies that maybe I've been eyeing up for quite some time. And I'm gonna talk about one of those companies that I've been eyeing up for probably the last few months here. So we'll go into the portfolio here, update you guys, and then we'll talk about it. So if you're new to the channel, welcome. This is where you put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So on Tuesday here, the portfolio is closing out at $11,644.89. We're down $30.44 on the day. 1 week, we're down $165.98, down 1.41%. For the 1 month, we're down $563.58, down 4.62%. For the 3 months, we are down $842.12, down 6.74%. For the 1 year, excuse me, we are up $869.52, up 8.07%. And for the all, we're up $1,545.09, up 15.3%. Currently, we have $15.62 in the cash account. $100 is currently going in there. But we are going to talk about one company in particular. So that's the portfolio. There's nothing else to it. It just keeps on trending down, but we already know it's happening, and there's nothing we can really do about it. It's really out of our control. In these types of markets, you'll probably find that we can look back at like April 2020, when everyone and their dogs, cats, and goldfishes started opening trading accounts, started looking at investing, started looking at ways to create money. Right before that time, it was really great. And then April of 2020 came. A lot of things were happening in the world, and things started plummeting. And then all of a sudden, everything started just shooting up. Probably one of the funnest couple of years in the market, for sure. And now we are seeing the effects of that. A lot of people are experiencing what they are not used to at all. For those that have been invested for longer than 2020, maybe 5, 10, 20 years, 30 years, 40 years of investing, this is not new. This is something that tends to happen. It's a pattern, and we got to follow that pattern. And this is where we have to look for value. And please, no Warren Buffett quotes in the comments, please, because we all know him. Although he's a great investor, but still, let's just keep it out. Let's just try to keep it original in that sense. But now is the time to seek value in certain companies that you've been eyeing up, and that's what we need to do. So one of the companies that I'm looking at is actually Alphabet, which is the parent company of Google. Ticker symbol GOOGL, I think it is. So let's just look it up here. Google. There it is. GOOG. That is a CDR. I do not want the CDR, unfortunately. There it is. NASDAQ. So here it is, price at $2,291.69 USD. It's up $30 on the day, up 1.33%. Here's a company with a market cap on here on Wealthsimple Trade at 1.49 trillion. In other ones, it's stated differently. PE. It's been a long time since we've seen a PE on Google close to that 20 or lower than 20. And it just keeps on getting closer and closer to the lower 20 mark. This company's 52-week high is $3,000. 52-week low is $2,230. Now, take into consideration April of 2020, this stock was only like $1,092, right? And now it's getting to that point where it's doubled in 2 years. And it's coming back down, which is not a bad thing. This is a stock that's traded on the NASDAQ. This is a company that is very, very powerful in its search engine. As we know, if you can't find it, Google it. If you can't to make it, go to Google, right? Very famous company. Everyone knows this company, and I think there's a lot of value in a company like this. Although it is a tech stock, and it seems unfathomable that a company at 1.49 trillion, or in other scenarios at 1.51 trillion dollars at a market cap, can grow any more than that. But we've seen companies do that. And Google is just one of those companies that I think still has those year-over-year growth. For like last quarter, it was up like 22, almost 23% in its last quarter. I think that was back in like April there. And we're probably going to be seeing double-digit growth from this company for a long time coming. And I hope that I can buy this stock soon. And you can wait till the split, or you can wait at a price that you can purchase this, or you can even do fractional shares. The thing about Google is that $2,291 US is probably like $5,000 Canadian. Just kidding, that was a joke. It's probably in that 3.5 range, and that's pretty much a vacation for some people just to purchase a stock. Now, if you're not going on vacation and you got some money to burn, all jokes aside, because we're literally burning money at this point with the way the world is operating, purchase it. It's going to be a split, so the company Google is going to be doing a split, 20-for-1 split here in July 15th, I think, is the time that it'll be doing a split, and it'll be a 20-to-1 split. So if you already own a stock of Google, you're going to get 19 more shares. And this is the third split that Google has ever done in its lifetime. The first one was a bit controversial, as they had Class A shares and then regular shares, and that's what caused the split. So it wasn't really a split, and that happened back in like 2000 and don't remember. But then the next one was like 2014. They did another split, and this is their next one. So this company is a value company for me. It doesn't pay a dividend, as you can see on the yield side, but it will go into one of my portfolios. So that is the stock that I am looking at, and it's just an impressive company. I've kicked myself in the butt for not investing in this company before, but it is what it is. And so moving forward, I am waiting for the split to happen to go and purchase this stock and to start building a position. I'm not going to do fractional shares with this one. I want full shares and have stake in the company that way. And so I'm sure there's going to be continued growth of this company. I mean, they own 10% of the market share globally when it comes to, I think they're cloud computing for Google Cloud, which is actually phenomenal numbers when you look at it at a really condensed level, or a micro or macro level, or whatever they call it. But when you really look at the numbers, it is a massive number. And so that is the company I'm talking about today that I am strongly looking at. And of course, this is not financial advice at all. I'm just here entertaining everyone, creating videos, and doing what I do best, and that is building a dividend portfolio right in front of your eyes. If you're feeling the market, it's okay. This is where DCA, dollar cost averaging, comes in. That can help you. Now, I'm not saying that you need to put everything in and that's all you can do. Is just look at the value positions that you may have and start investing in those, because you know they're going to come back, like blue chip companies. Now, if you have a lot of these growth value stocks, tech stocks that are getting hit, the Nasdaq's down like over 20%. And if you have these positions where they're down, a great way to kind of protect yourself from the volatility of those stocks, and again, this is not financial advice, is to purchase blue chip companies that pay a dividend, which soften the blow when it comes to continued downfall in the stock market. As you can, I'm pretty sure you guys have seen in my last video where I'm showing you the performance of the portfolio. The only thing that's essentially keeping us afloat are those dividends, and they're working their best. So that's pretty much my strategy. It's kind of a hybrid between both. And of course, Google is not going to go in this portfolio because it doesn't pay a dividend, and it's going to go into a different portfolio. But because we talk about financials or stocks on this channel, why not share with you guys what I'm planning on doing? So July 15th, I think, is the official split. July 15th or July 12th is the official split for Google. And that's going to be one of my next moves. And remember, Google does own YouTube, and that's what this platform is. And they are together, just a juggernaut. And of course, they are pretty much a duopoly. I might get in trouble for saying that, but I don't know. You know, they own everything that goes. Let's say you build an app, it has to go to the Apple Store, or it has to go to the Google Play Store. Both companies have to take a 30% cut, and that is massive for just apps on your phone. And yeah, I have nothing against them. I enjoy Google. I use them as much as I possibly can on all the platforms that I do use. I Google search, I Google everything pretty much. And of course, it's researched information, so I'm not doing things that are out of the norm. But yeah, that is what I'm doing. And maybe you should look at some value stocks that you've been looking up in, even for Canadians like myself. Shopify might be one of those companies that you're looking at. I don't even know what Shopify is at. I think last time it was in the thousands per share. And now I think it's down. Yeah, it's down to $436. I mean, year to date from $1,500 right down to $436. And some people might be thinking, oh, I should dollar cost average down, but should you really be doing that? Because it's up. It was from $2,100 back in 2021 of November, right down to $436. Should you really dollar cost average down? Do you really believe in that company, or have you confirmed your losses? So Shopify might be one of those companies that other people are looking at as well. Now, considering the PE ratio, Shopify is still 272 PE, so price to earnings, and that's quite a bit. And you know, whatever your conviction is, whatever you believe in, no judgment at all, but that's also a company that maybe I want to look into. And so other than that, guys, that's pretty much it for the video, but we will open this reward. So if you haven't used the link down below, it helps you sign up for Wealthsimple Trade. You can use the referral code. You get one free stock once you fund your account, and I get one as well. So it's always a win-win situation. So other than that, guys, let's go ahead and reveal the reward. And we got Meta Platforms, which is Facebook. Holy moly, that is awesome. I'm gonna screenshot that one. That is awesome. We got Facebook, Meta, but it's unfortunate that I don't get the stock. It's okay, we'll just deposit that reward, which is fantastic, and maybe later, and that's going into the cash account. We got the Facebook, we got the Meta stock. That is awesome. Thank you. Let's go ahead and go into the rewards here, and I just want to thank Joshua, thank you for using that referral code. I really do appreciate it. And yeah, that's awesome. So on that, guys, now you really got to use the referral code down below, and it's a win-win, literally. And we'll see you guys in the next one. Don't forget to leave a like and subscribe, and we'll see you in the next one. Bye.